Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Clean Energy and Renewables Conference. The next presentation of the day is from Stardust Solar Energy. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Mark Tadros, Chief Executive Officer and Chairman, and Erica Bears, Vice President of Corporate Communications of Stardust Solar Energy, which trades on the OTCQB venture market under the symbol SUNXF and on TSXV under the symbol SUN. Welcome, Mark and Erica.
Thank you, Lily. Welcome.
Thank you, Lily. Appreciate the introduction. So I guess I can dive right in. First off, thank you to everyone joining us today. It's a pleasure to present to you, and we're terribly excited to bring our business model to the OTCQB and expand our horizons with a ton of American investors. So today we're going to talk about Stardust Solar Energy. We have an extremely simple to digest business model. We're the largest solar franchisor in the world, primarily based in North America, but we do have a global expansion underway. And our model is really easy to digest. Essentially, we are the McDonald's of the solar industry. Our franchisees are in the field, developing their local territories, installing solar panels, energy storage, and EV chargers for residential and commercial properties. So our company became public just about a year and a half ago. About 6 quarters we've been trading, and we came via CPC, or a SPAC, if you will, in October of 2024. Today, we currently operate over 103 franchise locations across North America primarily, but we also just opened up our first 2 international offices, one in the Caribbean in Antigua and Barbuda, and one in Zambia, Africa. So global expansion is underway, but you should know that 101 of our franchise territories are located in North America. We did roughly $5 million in 2025 in top-line IFRS revenue under a very profitable 40% gross margin business model. We'll talk a lot today about the franchise model and why it's so profitable, but our current operations are tuning at 40% gross margin. And we're forecasted to hit between $8 and $10 million in 2026. So before I get into the business model and everything we've built at Stardust, I just want to talk a little bit about the solar industry itself. You know, there's been a lot of talk on the pullback of incentives and different government programs and, you know, how that might affect or create headwinds, if you will, for the solar industry. And that is all very true. I don't think anybody can deny that. However, the important message for all the investors listening today is that solar is built on an ROI for a homeowner or a business owner. So what do I mean by that? Just in the last 10 years or even the last 5 years, the technology has gotten incredibly efficient. But while that technology is getting better every single year, it's getting cheaper every year. So the inverse relationship between the tech getting really good, but also the cost getting really, really cheap is what creates the ROI for people investing in solar. It's not necessarily a tax credit or one specific incentive. You know, a real world example is when I started in this business, 10 years ago, we were buying solar panels for over $400 a panel that produced only 220 watts of energy. Today, we're buying solar panels for $90 a piece that are producing 450 watts of energy. And what that's essentially done is it's created an ROI, a return on investment for business owners and homeowners, well under the life of the system. You know, these systems are guaranteed for 25 years. And to give you an example, somebody in Ohio is currently getting an ROI of 7 or 8 years. So they're getting their money out on the savings of their electricity in much less time than the system's guaranteed. Okay, so let's talk about Stardust and what makes us unique in the market and why we're a great investment. So the first thing you should know about our company is we didn't start as a franchise business. We launched about 10 years ago. We started off doing installations, and quickly we realized we needed a niche to make us different in the industry. So we brought to life Stardust Solar Education, Training, and Compliance. And essentially what we did is we took the National Electrical Code, we boiled it down to just the relevant chapters that are pertinent for installing solar on commercial and residential properties. And we created a training platform for people across North America to get trained and certified. I'm really happy to let everybody know we're the only company that's certified and accredited by CSA in Canada and also a proctor of NABCEP in the US. So our training's been vetted on both sides of the border, and that was really the beginning or the genesis of the company. Once COVID rolled around, it changed our model. We weren't able to run, classrooms or workshops, and that's when we had to pivot or change our model or get, reinvigorated. And that's when we went back to our students and wanted to follow up with them to see how we could help them advance their career in solar. And one thing became obvious. Everybody wanted access to resources. Where can I buy solar panels? Where can I buy energy storage? Where can I get help on my engineering or my branding or my marketing? And that's when the light bulb went off and said, this is not a training company. This is actually a franchise. So in 2020, we launched Stardust Solar Franchise. And we quickly realized the scalability of that business was perfect for the public markets. So why franchise with Stardust instead of opening on your own? So a Stardust franchisee gets access to a lot of things. The first would be our brand. You're now operating under a publicly traded company, and that brand carries a lot of weight when you're communicating with your customers. As everybody knows, public companies have a different level of regulatory adherence, and that gives a lot of credibility to that franchise that's in the field. We also manage all of their marketing, digital marketing, web pages, social media accounts, digital. It's a lot that we take off the franchisee's plate, and they don't have to go into the market being, Tom's Solar. They step in right away as Stardust Solar, Mississippi, or whatever territory they own. The second thing we do for the franchisees is that certified training, which is really the backbone of our entire company. But that allows a few things. One, it gives confidence to the franchisee that they're getting trained and properly prepared for their venture. But two, it also signals to the market that everybody that's showing up under a Stardust Solar brand is trained and certified to install solar. So we're reinforcing that credibility of our local operations. The next thing we do is we give our franchisees access to all of our partnerships. This is an important concept for every franchise model. The reason franchises, or part of the reason franchise models are really successful, is economy of scale. We pool together buying power from 103 locations and then are able to turn around and negotiate deeper discounts, get bigger partnerships, and we pass that all onto our franchisees. The next thing we do for a franchise coming into the system is we take care of all their quotes and proposal generation. That saves a ton of time. Instead of a contractor having to work on this stuff at night at the end of the day, they simply send in their utility bills to head office, and within 48 hours, we have engineers that have spat out proposals for Mrs. Jones and prepared those quotes for them. It also allows us at head office to manage and monitor all the quotes going out through our entire franchise network. The next thing is engineering plans. So this is a big one. Technical documents, when you're going to start a solar project, you're going to usually require 3 permits: a building permit, an electrical permit, and a utility permit. And those 3 permits will require technical documents, 2-scale drawings, stamped engineering drawings, and we give access to all of those engineering plans or plan sets to our franchisees so they don't have to go outside the network and our team is actively working on pushing those permits forward. Also, financing. So a lot of these, independent people that are in the solar industry are going to struggle to get banking from creditors or big banks and financing arms. When you enter into the Stardust system, we automatically give you access to our financing partners. So all your projects, whether the residential, commercial, even utility scale, can access financing through our partnerships. And then finally, supply chain and warehousing. We talked a moment ago about economy of scale. Well, coming with that is all of our distribution network across North America. So local franchisees don't even need to have a warehouse or a storefront. We'll literally drop ship all the materials for every single project at site, send the packing slip to the franchise owner so that they can review everything is there, and then they knock out the install. So a very clean system that provides a ton of branding and a ton of support to the local franchisee. Okay, most importantly, how do we make money? So very quickly, I'll give you an overview of the business model and how we generate that 40% gross margin, how we generate revenues through our franchise model. So there's three ways primarily. The first is franchise fees. So we charge a business owner or an entrepreneur $50,000 up front to buy a franchise from us, and we charge a 5% royalty in perpetuity on top line revenues. Now that initial 50K and the 5% royalty are all 100% gross margin business for head office, and it probably represents about 20% of our revenue pie today. But I would note the franchise fees is the fastest growing segment of our revenue generation. The second is education and training. So nothing's changed there. Like I said, it's been the genesis, the beginning of the company. We still do a lot of education and training. It's actually a feeder system for our franchise network, and that operates at 80% gross margin, another really high margin piece of our model, but only represents about 10% of our total revenue pie, and that is the piece that is actually shrinking the fastest. And then the third, which represents 70% of our revenue pie, is products and services. So all of these franchisees that come into our system have to pay the 50K up front, the 5% royalty in perpetuity, and contractually obligated to order every single solar panel, battery, every single nut and bolt has to come from head office. Just like McDonald's would sell you all your burgers for your local McDonald's franchise. And that generates, like I said, 70% of our revenues and operates at a blended gross margin of 25% across all SKUs. And we have a lot of SKUs in there, but some of the high-end margin stuff is solar panels. We probably make 35 or 33% margin on those versus batteries, which is lower end, probably 18 or 15%, but blended 25% gross margin. Now, coming with our partnerships is access to premium equipment. Really happy to report Stardust is one of Tesla's largest distributors of Powerwalls in Canada. And that's a premium product, regardless of political affiliation. The truth is the Powerwall is a great piece of technology. And buying into our franchise, you now become a Tesla distributor of Powerwall equipment in your local region. Of course, there's specific training and certification required to get access to those products, but it's a great boost for a local business to get access to Tesla equipment. It's a reputable brand. And now, you're operating in the field representing a public company. You have assurance that everybody is NABCEP certified and trained, and you're a Tesla representative. You're really offering a lot of value to that homeowner or business owner and instant credibility with your franchise. Okay. Another really nice piece that we've developed is investment into franchisee projects. So as I mentioned at the beginning of the call, we're primarily concentrated in North America, 101 locations. However, we did open a branch in the Caribbean in Antigua. And as I mentioned, we actually opened a franchise in Zambia, Africa. Now, this was a very exciting expansion for us. And just for quick transparency, that opportunity came from our Biloxi, Mississippi franchisee who wanted to move back home to Zambia and bring his business there. We didn't think we were going to be able to make the leap, but it turns out there was no regulatory hurdle for us to do that. So we opened our first international franchise in Africa, and lo and behold, he was able to secure a power purchase agreement with the Zambian government. So this was a huge advancement for our business and really represents a global arm that we're now developing. And the really nice thing is because we're a public company, we were able to go back to our shareholders, the public investors, offer them an opportunity to invest into this project through the Stardust stock, and then bring those funds to Zambia to bring the project to life. Now, this is a massive project, 30 megawatts of solar that we're installing. To give you an idea, it's about 45,000 solar panels, and it's a 20-year PPA. So we have a power purchase agreement that guarantees us 7 cents USD for every single kilowatt hour of energy we produce over the next 20 years. And that's guaranteed by the Zambian government and the Zambian utility. So what does that mean for investors? You know, we'll probably invest, I would say, $10 million over the next 18 to 24 months to bring this project to life. But it guarantees us 100 million USD in revenues over the next 20 years on a royalty format. So if you break that down, it's 5 million a year royalty on the construction of this project. It's a great win for our company. It's an advancement. And as you would imagine, once we announced this project, we quickly got approached by multiple other countries. We had interest from Peru, the state of Oaxaca, Mexico, Bahamas, and the Caribbean have all approached us to develop these utility scale PPAs. So it's very, very exciting for the future of our company, but also for our investors. Okay, so let's just pause right there quickly for a second and just think about what are we really doing. A lot of people want to talk about solar energy being green energy, and that's very true. It's a renewable resource, doesn't create emissions. But the real opportunity here that I want everyone to focus on is a demand and supply issue, okay? It's all about the demand for energy that's coming. As we move into the future, there will be demand on all fronts, especially from the technology sector. I mean, AI technology, cryptocurrencies, robotics, electrification of vehicles and charging stations. All of these future technologies are going to require energy. So regardless of which form of energy you think is the best, traditional or renewable, the truth is there will be a demand for energy. And I think that's the opportunity that we're addressing. You know, there's going to be room for everything. Fossil fuels, fracking, natural gas, coal, all of it will participate in the energy production of the future. But the truth is the grid doesn't have what it needs to satisfy the demand today, let alone the demand of the future. So when you recognize that, you should see that most energy companies that have a good, profitable business model will have success over the next 5 and 10 years as that demand for energy goes up. Okay, so very quickly, I just want to circle back on our footprint to give you an idea of the scale of our company. So 101 locations in North America. That's broken down by 49 locations in the US and 52 locations in Canada. And then we have the one in Antigua and the one in Zambia. Behind that, we have over 2,500 trained installers in our network. So to be clear, those are not franchisees. Those are specifically people who have gone through our training program, are part of our network, but have been certified through Stardust Solar. And then we have 7 training operations all across North America. So these are training operations that work for Stardust and are actively in the field creating new certifications and training new people out in the field. Okay, I also want to highlight one really important note for everybody, and I think it's just for transparency. So we have 100 plus locations or territories in our system. That is true, but that's actually 37 operators. So just the concept there is some of our operators, some of our franchisees have multiple territories. And I only offer that for transparency so you get a good idea of the scale of our network. So where can we go with this model? Well, we finished 2025 right around 103 locations. You know, we had to do a little bit of trimming of ones that were not doing great, and we added a whole bunch. And for 2026, we still expect to have massive growth there, and we're on track to add 25 to 50 new locations just this year. So adding those new locations will have an injection of high margin capital into our business, which reduces our demand to go raise money in the public markets. It scales up our overall backlog or network of projects, if you will, we have across North America and across the globe. And more importantly, it allows us to keep growing our footprint, which was the whole reason that we went public in the first place. You know, we're a relatively new issuer, but the reason we went for the public markets is to inject capital into a profitable model, scale up quickly, and grab market share. So we think we could easily get to 1,000 locations in North America alone, let alone our global expansion. So we're still looking at 10x growth from where we are today in the very near future. So sales, revenues at the company, you know, it's a very simple slide. Like I said, we did 5 million in 2025. We're expected to do 8 to 10 million in 2026. And it's just a very simple scale for you to see. The company has grown consistently 40% year over year for the last 5 years. And the reason being is it's a classic franchise model. The bigger it gets, the more the pool of revenues grow, the bigger our backlog of work grows, and also important to note, the more profitable we become. So in that time alone, we've gone from 32% gross margin all the way up to 41% gross margin today. And we expect those numbers to continue to scale and grow at this rate. Okay, and very quickly, I'll just talk a little bit about our corporate team. So, you know, myself, Mark Tadros, I'm CEO, chairman, founder. I've been an entrepreneur for almost 20 years. I've had 2 prior exits before I started Stardust. One was a private sale of a business. The other one was a publicly traded company I listed back in 2015. So a lot of experience building and selling companies as well as the public markets. And I'll touch really quickly on Eamon McHugh, our COO, master electrician by trade, but also has over 10,000 hours of actual solar experience. Vitaly Melnikov, our CFO, 20 years experience as a CFO in the public markets. Paul Belush was part of the executive team that took 1-800-GOT-JUNK to $100 million. So we have a really robust board and executive team managing this company. Okay, so very quickly on the market cap, you know, today, I personally believe we're heavily undervalued. When you look at a company that's on track to do 8 to 10 million in 2026, and we're trading at a market cap of $10 million. It's a very, you know, attractive position for people to go look at our story. I always encourage people, take a bite of our stock, put it in your portfolio, watch the story grow. Let us prove it to you through the financial statements, and you'll recognize very quickly that we're severely undervalued. One last note I'd like to give you on this slide is beneficial ownership. So 40% of this stock is held within the founders. And myself personally, I own 18 million shares. I'm the largest single shareholder of the company. Never sold 1 share since we've gone public. And it just gives you an idea that the management, the founders of the group are really heavily baked into this project. Okay. And finally, you know, we talked a little bit about, you know, the management team. So, you know, there's a strong comfort there, that we have the expertise, we've done this before, but some of the other reasons that we're really an attractive investment, and to wrap up this presentation. So the first thing is the model is very scalable, like any franchise. We can grow this thing very quickly simply with cash injection. And as I mentioned, the faster we grow, the more profitable we become. And we've actually crossed into EBITDA for the first time in Q3, and we're hoping that trend continues. So we've hit the inflection point with our scalability where we are becoming profitable. The next thing, we're an asset-light model, which takes a lot of the liability off of the balance sheet and keeps us very, very lean as we grow the business and the business model. We talked about our margins operating at 40% gross margin. But I think the biggest thing that I want to leave with the investor group is that we have this great business model built on a classic franchise, a franchise business, but we've now expanded into global opportunities. And we have multiple state governments coming to us, asking us to fund projects under power purchase agreements. So there's an opportunity for us here to own solar power plants around the world, generating electricity and paying us royalties for decades. That gives a lot of assurance to investors once we bring those to life. And finally, all revenue streams at Stardust are high margin, but royalty in nature. So, we talked about the PPA that we're doing in Zambia. Our franchise model has a 5% royalty that pays out over a decade for every single franchise on their top line revenues. And our training model, which is heavily based on our LMS and has a subscription model where a lot of these students can buy in for an annual subscription fee to keep their certifications up to date. But again, reinforcing and creating that reoccurring revenue model, that royalty model. Okay, I'd like to thank everybody for bearing with me and following the presentation. I'd like to open the floor to any questions you might have.
Okay, great. Awesome. Thank you, Mark. We actually have quite a few questions. I'm not sure with the time we have to get through them all, but we'll try our very best. I'll go with an easy one to start. We've got, when is the next quarterly financials being published? So they're just wondering on timelines for that.
Yeah, so those will be out by April 31st.
Okay, fantastic. And then Victor has a great question here. Q3 showed a 99% YOY revenue increase and an 84% increase in gross profit. What are the key operational or scale advantages that drove that margin expansion? And can those margins improve further as the franchise network grows?
Great question. And I want to say, yes, it can continue. It'll start to improve at a slower rate, but we can continue to improve. So the model, the franchise model gets more profitable the bigger it becomes. The perfect franchise is McDonald's. They operate at a 20% EBITDA. We're at a 1% EBITDA today. So there's a lot of room for us to grow there. And just to answer the first part of his question, the scalability came from adding new franchises. The more franchises we add, the more 100% margin business comes into our network, and the larger our backlog of projects grow.
Great. The next question is from Eric, also a great question. With new technology initiatives, a global training platform, and government utility partnerships, how do you want investors to think about Stardust in 3 to 5 years?
Yeah.
As the primarily franchise company, a royalty platform, a clean energy education leader, or a combination of all three?
I absolutely love that question. Thank you for that. I would say it's all of the above. And the reality is, this is one of the benefits of investing in Stardust. We offer versatility to our investors. We're not square pegged on one model, going down with the ship. We're doing it all, but it all works seamlessly together. Now, the global partnerships is definitely something very interesting and exciting that we're exploring, but the franchise model will always be the backbone of our company.
Great. Next question is from Roger, also another good one. To what extent does the Zambia project serve as a template for additional utility scale deals in other emerging markets where you're already building government and utility relationships?
That's another great question. And it's true. And that's what really gets me excited. You know, I wake up every day and I think about all these great projects that we can do. And as I mentioned in my presentation, we have already been officially approached in at least 3 or 4 other countries to do these type of projects. And I would also say it's not just emerging markets, which by the way are great to invest in. You know, the Caribbean, Africa, these people need the energy. Their grid is archaic. Energy is very expensive, but it's also here in North America. We've been approached by data centers that want to build out utility scale operations under a PPA to produce energy for their operations. So a ton of opportunity there. It's very exciting for the future of Stardust Solar.
Brilliant. Question from Tom. You've just expanded into Atlanta and highlighted new U.S. franchisees in several high growth markets. How quickly do you expect U.S. system-wide sales to scale relative to Canada? And what does that mean for your royalty stream over the next 2 to 3 years?
Yeah, so another very good question. And it's true. Our Canadian franchise market is a little bit more mature, only maybe 3 years ahead of our US franchise model. But I expect in the next 2 years that the US market will surpass our Canadian market. It's just an economy of scale proposition. Also, Americans are very entrepreneurial and they dive into these types of businesses quite well. So very, very soon, I see the US market overtaking the Canadian. And long term, my projection is 80% of our revenues will be American and 20% will be from Canada. And that's once we reach about 1,000 locations in North America.
Great. Question. Hi, Mark. Eric says, starting with which quarter do you think you'll start to recognize royalty revenues from the Zambia project?
Yes. This is the exciting one. I would say Q4 of this year. And really, that's a personal goal. Once we do that, I think we'll have proved to the world that this model works. But he'll be happy to know, I think Eric was the guy's name or the fellow's name. We've already broken ground in Zambia. We've had boots on the ground. Our management team from Canada went to Zambia, met with the vice president of Zambia, met with the CEO of the utility, and broke ground on site. So construction is underway. Optimistically, we're looking at, September, October, when we turn on that array, invoice the government and receive payment. It'll be a huge announcement for our company.
Brilliant. Okay, and John asks, as we move deeper into commercial installation with expertise, what's the typical project size and margin profile versus the residential side? And how could this mix shift influence the overall profitability of the company?
Okay, I missed the first part of the question. So you're asking me about the margin difference between commercial and residential projects. Is that correct?
Exactly. That's the exact question. So as we move deeper into commercial projects, how does that differ from our residential side, and how could that maximize our profitability?
Yeah, so the revenue growth will come from commercial projects because the projects are much larger scale, okay? But really important to note, the profit margin on the residential projects is really the most attractive part. So this will be maybe a little bit of a hard concept to grasp here, but the fact that we're franchising and we're scaling with all of these operations allows us to attack the high margin residential business at scale, okay? Versus just having one company and multiple offices. We're a franchise. So the margin on a residential project, to answer the question directly, is probably 25% for easy math, versus the margin on a commercial project is like 15 or 10%. So the margins are smaller on commercial, but the ticket price is bigger versus residential, which is high margin and a little bit smaller. Now, the benefit of our model is we do both, and we can reach the high margin business at scale through the franchise model.
Great answer. So next up we have Nick, and Nick wants to know, as we prepare to present a profile clean energy investor like this one, what key proof points over the next 12 to 18 months would you like to focus on to better reflect the underlying value of our multi-pronged growth strategy?
Yeah. So, you know, I like to consider us a financial statement company. It's very easy for me to come up here and say, hey, we're going to add 100 franchises, 200 franchises, which honestly is the KPI. It's the macro KPI for our story. If you want to watch our story from afar, just watch our number of franchisees grow. And that directly correlates to the growth of the revenues, the profitability of the model. Everything flows from the number of franchisees. But what I would tell investors is watch for our financial statements. I see us improving continuously, especially as we get more comfortable in the public markets and all the extra expenses of running a public company. We're finding ways to make ourselves extremely lean. And for an investor, you have two things you can watch for, right? The key KPI is the growth on the franchise network. The second is our financial statements, which I believe will continue to improve on the bottom line, on the EBITDA. And then I would even say maybe the third are these future, global, international projects that we're going to be doing on a one-by-one basis.
Fantastic ending. And I think that's a great question to sort of end on. We do have some other questions, but we are at time right now. I'd like to say a thank you to everybody who joined today. We really appreciate your time and your interest in Stardust Solar. I am available if you want to send emails. My name is Erica Bears. I'm the Vice President Corporate Communications for the company, as well as Mark is also available, and I am also available for meetings. It should be a link for you to add that on. We've put in some times availabilities for us. If you'd love to have a one-on-one with us, we are available, and there's some time slots there for you to join. I will try my very best. If you want to send me those emails, those questions in an email, we would be happy to respond to those. And you can just email me at erica@stardustsolar.com, and I can respond to Sam, Eric, Lawrence, Mark, Joyce, and Jonathan as we move through the day. So thank you so much for your time. Mark, I'll let you finish with a thank you as well. We appreciate your time and energy.
Perfect. Thanks so much, Erica. Really appreciate you helping me in today's presentation. I'd like to thank everybody that joined us today. I'd also like to thank the OTCQB. Always an honor to present. Really enjoyed today's presentation and looking forward to keeping in touch with everybody here in the future. Thank you.